Welcome, everybody. I'm delighted to be speaking at this year's specialist lending event on super specialist solutions. Before jumping into the presentation, I thought it'd be good to define what a specialist lender caters for. Specialist lenders are those lenders that provide solutions for borrowers that the banks or challenger banks struggle to fund. It could be for any reason, but the main examples include foreign nationals, borrowers with adverse credit, everything off the beaten buy-to-let track, including first-time landlords and even first-time buyers. And let's not forget expats now that Brexit is done either. We're also the go-to lenders for low-yielding residential properties, limited company structures, holiday lets, and so much more. Specialist lenders are also the partners brokers turn to when they have to complete a deal in days rather than months. And finally, we're typically the go-to lenders when a transaction hits a brick wall for whatever reason. I hope to try and cover the most common scenarios, or as we like to call them, opportunities, in the next 15 minutes or so. Now, I'm pretty sure I won't be the first or the last speaker to start today's presentation talking about COVID-19. And although we're hopefully approaching the end of the pandemic with the mass vaccination rollout, the full economic impact of the COVID pandemic has yet to hit home. There are likely to be many tough months and even years ahead. Brokers know this, and of course, us lenders know it too. Before looking at the opportunities in more detail, it's important to understand what has driven the growth in the specialist lending sector. This growth was fueled in 2020 when the high street banks reined their risk in sharply when the pandemic struck. And they remain highly conservative in the face of rising unemployment, prospect of unprecedented fiscal squeeze, and the likelihood of ever-increasing defaults. Payment holidays haven't helped either, but more on that later. To give you an idea of the recalibration of risk within the mortgage market, at the beginning of March 2020, before the first national lockdown, there were 779 products at 90% loan to value, according to Moneyfacts. That number had fallen to just 70 by the beginning of July, a record low. And even though 90% loan to value loans are now starting to return, underwriting remains extremely tough. In the specialist lending area, LTVs and appetites were also impacted heavily during the first lockdown, with some specialist short-term funders stopping lending completely whilst understanding what their loan books look like and also trying to figure out how to collaborate and underwrite remotely. Things seemed to settle down by the summer as lenders found their feet and their appetite to support the broker community. Since the start of the pandemic, first-time buyers have once again struggled to secure mortgage finance, and that alone, almost overnight, reignited the rental market. The first signs of this were evident back in July, when Arla Property Mark, the regulatory body for letting agents, released its private rented sector report. This report showed that July was the strongest month on record for new tenant numbers, with letting agents registering an average of 97 newly registered tenants that month. Would-be home buyers suddenly became would-be tenants. As you can imagine, landlords have been hell-bent on accommodating this demand and went to town on the property market last year. Reflecting this, recent analysis by Hamptons found that 41,700 new buy-to-let limited companies were set up in 2020. That's an increase of 23% on 2019. Now, clearly one reason for the rise in limited company loans is to mitigate the tax hit on personal investors. But this also reflects the renewed interest in buy-to-let as a whole. And even though there is light at the end of the pandemic tunnel, the appetite of mainstream lenders for anything that's not prime and lower loan to value will remain subdued for the foreseeable future. This, of course, is a problem for brokers. There's a very realistic chance that term loan transaction volumes will suffer this year, all the more so once the stamp duty holiday ends. To make matters worse, brokers are also under pressure from growing number of product transfers as the high street gets really aggressive with their retention strategies. However, the ever-tightening criteria and appetite from mainstream lenders is clearly increasing the volumes of specialist lending, which is where we see the biggest opportunities for you. There's also the explosion in new tech platforms that are seeking to part automate advice, removing the need for a broker. So I would argue that the opportunity for brokers in 2021 is to understand how specialist niche lenders can help them continue to drive strong revenues, even if the mainstream mortgage market is under severe pressure. Activity lenders in our specialist lending sector went through the roof in the second half of 2020. Landlords used bridging finance to acquire new properties rapidly and add to their portfolios in anticipation of increased demand. They also continue to use refurbishment loans to manufacture value out of their portfolios and to accommodate the growing wave of tenants. To this end, we've seen lots of houses converted into multiple units and bigger houses, once planning permission is secured, being transformed into HMOs and thereby increasing the yields in these portfolios. Now, as a broker, the opportunity here is massive, as you will typically have the opportunity to assist with the bridge, then flip the client onto the refurbishment facility and fund the works, and ultimately even the refinancing onto a buy-to-let loan at the end of the term. This could be 3 commission payments for the same deal. Jumping back onto the buy-to-let opportunity now, and whilst limited company buy-to-lets are becoming far more mainstream, many of these lenders still can't accommodate properties being purchased in offshore vehicles. Brokers here continue to turn to specialist lenders for these and their other difficult borrower scenarios. The resurgence of buy-to-let is certainly one of the major stories of 2020. And despite the fact the size of the market is estimated to have dropped last year from the 41 billion in 2019 due to the pandemic, this year it's expected to comfortably exceed that level. It's ironic, really, that after 4 or 5 years in the wilderness, it was a global pandemic that threw landlords and their mortgage brokers a much-needed lifeline. We're certainly seeing more demand from foreign nationals, and I expect this to continue in this year. If Brexit hits the pound hard in the months ahead, for high net worth foreign nationals, UK buy-to-let gets cheaper and more appealing. And if the pound and economy outperform, the UK will be seen as a safe haven for foreign investors. Either way, it's win-win. And Octane, along with a handful of others, will be well placed to deliver the solution these underserved investors crave. Recently, the UK was even named the top global property investment hotspot in a survey by international law firm DLA Piper. Of the 500 high net worth investors and asset managers surveyed, 33% said they wish to invest in UK property during 2021. Investors headquartered in China and the US ranked the UK as the best for residential property investment. Even investors in the UK, Germany, France, Spain, and Italy named the UK as the 3rd best place for property investment. If you haven't yet set out your stall to cater for the increased foreign national clients flooding the market, maybe now should be the time, as we see this as a huge growth area for us in 2021 and beyond, especially now that Brexit is done. Whilst on the topic of foreign nationals, it's really interesting to note that during the first 9 months of 2020, Hong Kong buyers were the 2nd busiest foreign buyers of property in the UK, according to research by Aston's. Hong Kong buyers purchased 305.6 million of prime London homes, and 6,438 homes amounting to 8.1 billion across the whole of the UK. And even though interest may have dropped in the short term, demand from Hong Kong buyers will soar in the lead up to the new visa for application scheme, which opened on the 31st of January. I read in The Guardian on Sunday that it is thought that up to 300,000 Hong Kong nationals will be looking to relocate to the UK over the next 5 years once the restrictions are eased due to the political situation there. The article also spoke about how an estate agency in London has already hired an ex-Hong Kong national who made that move 4 months ago to capitalize on that opportunity. For prime buy-to-let borrowers, of course, it's business as usual. That is, if your clients comfortably meet the stress testing requirements of the high street and challenger banks and only require a low loan-to-value solution. Yes, these prime borrowers, still very well catered for, but they're few and far between these days. The reality, of course, is that more and more brokers have non-standard landlords as clients, people who cannot meet the stringent stress testing and underwriting of the high street and challenger banks. Thankfully, that's where specialist lenders in the market come into their own. And those like Octane, who don't stress test their buy-to-let products at all, can be a godsend to you when you have clients with low-yielding residential or mixed-use properties. If you'd like to know more on this, please do visit the Octane stand afterwards, where one of our team will show you how to cater for these scenarios in full, and in some cases provide almost 20% higher leverage than the high street can to your clients. But what about clients who had decided to take a payment holiday? We're approached nearly every day by brokers who have clients who are now unable to refinance due to taking a payment holiday. Due to government advice, I might add. I know Octane and other specialist non-bank lenders will look at these situations much more favorably than the high street and the challenger banks, provided that the borrower wasn't in arrears before taking the payment holiday, and even in some circumstances where they were. It is crucial that brokers look beyond the banks for their clients' funding requirements in 2021 and beyond, if they're to capitalize on the opportunities in front of them. Instead of shying away from difficult clients, embrace them with the knowledge that the specialist lenders are hungry to lend and support their broker partners. Now, as this slide suggests, you name it, we probably do it. Specialist lenders cater for almost every eventuality. As I've mentioned already, first-time landlords, first-time buyers, foreign nationals, expats, low-yielding residential properties, limited company structures, offshore company structures, adverse credit. Don't forget holiday lets. And whereas the high street banks credit score, the specialist lenders credit check. It's a huge difference and an old school approach to lending that delivers the decisions your clients so desperately need. But even specialist lenders have their limits, and most will shy away from landlords with multiple non-standard circumstances. An example of this could be a first-time landlord with minor adverse and no income. Good luck with that on the high street. Another example could be a foreign national borrowing through a limited company seeking to finance an HMO. Now that kind of loan really will challenge, but one that we at Octane love and fund most days. In summary, the point I'm trying to make is that however complex the circumstances of the borrower in question, brokers will still be able to find lenders that provide super specialist lending solutions, such as, and I'm clearly bound to say this, ourselves. Specialist lending is a great way for brokers to diversify their revenues in the face of a slowing term market. The other thing about specialist lending is that it cannot be automated and powered by AI in the way that conventional mortgages can. It will, at least in our lifetimes, always require humans to drive it, i.e. the wonderful brokers watching this today. So why don't you try it out this year and make 2021 the year you give the so many specialist lenders out there a chance to show what they can do. Thank you.